on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Sunday. Welcome back to the channel. Pleasure to have you here. Although, I'll be honest, your weekend is probably more exciting than this boring Bitcoin chart up 0.1%. Is anybody out there as bored as I am? Please raise your hand. Let me know in the comments below. We've just been going absolutely sideways ever since we had, the most excitement we had really was right before Friday when we had the plummet, right? With the whole, CME futures conspiracy, right? Manipulation. But really, ever since then, it's just been incredibly boring. But I will tell you this, Mondays tend to see a lot more volume because today the volume is absolutely abysmal. You can see the real volume over here is only $306 million over at On-Chain FX, which is absolutely pathetic. So I would think that there would be a lot more volume coming in. We're probably going to see some kind of a move later on tonight if you're in the US. Don't forget, we do have the East waking up. So I do want to talk about that short-term price action, but there is something else quite interesting that I think we need to talk about on this channel. And the question is, who is actually going to continue to sell Bitcoin lower and lower at these prices? So I do want to look at some statistics. We have some data that basically suggests that we may be getting very close to seller exhaustion, meaning we may only have a little bit left to go before a reversal to the upside. I mean, you can see right here, look at this. The actual price is 9,587 and the futures price is 9,591. I mean, that is absolutely crazy. There's nothing happening in these markets. So that's what I want to talk about today. And if that sounds good to you, well, you know what to do. Also, one other thing, if you guys stay to the very end of the video, I'm going to show you proof that savvy investors are taking the opportunity to load up on Bitcoin during this very boring sideways time. Because let's be honest, this is one of the greatest times to actually load up is when there's not a lot of volatile price action, right? Not financial advice. We're going to get into that. Also, don't forget, today is the last day for the Ledger Nano S giveaway. All you got to do is drop a comment on literally any video throughout the course of the week, and we will pick a winner tomorrow. So, having a look at what is going on over here, Bitcoin dominance up to 69.2%. If we look at CoinMarketCap, of course, it's much higher. On TradingView, it's at about 71.71%, well above the high of December in 2017. So, probably not looking too good for a lot of the altcoins today. We do have some altcoins up today for sure. Nash is up 8%, Engine, ABBC, Synthetics again, Nexo, Elf, Lambda, but for the most part, they're putting in less than 1% gains, a lot of them putting in red, okay? So that is just what I wanted to look at moving forward. Also, Fear and Greed Index, is anybody even paying attention to this thing anymore? So, cryptocurrency investors right now, literally, what do we do? Where do we go? Should we be accumulating altcoins? Should we be selling Bitcoin? Is it doom and gloom? Are we going down to zero? We're not going down to zero, but we could have some sort of shakeout before the next leg upwards, right? So obviously you can see right here, we were looking for that manipulation. It happened on Friday. So checks calendar, checks chart until the bitter end. It is then AKA Friday. So shout out to Carpe, knocked them for that. But you can see what we're putting in right here, okay? We had this dip. Now some people are saying this is kind of like a bearish wedge or something like that, a bearish ascending channel. I mean, really, however you look at it, basically we fell and we're consolidating. So I would look for some kind of a move by the end of today, either to the upside or to the downside. Unfortunately, this type of a pattern suggests that we'll be moving to the downside. Now, let me just go into this real quick. Okay, you guys know I am not a Bitcoin bear, but I do want to be realistic about it. Now, obviously, the higher levels that we need to get to are way, way up here. We'd need to break above this $12,300 level. Then we'd have to get to a $13,000 level, and then finally break above the wick that we had. We're nowhere near that. So now we need to start talking about where might we bottom out, right? Well, currently we've had very, very good support around this $9,300 level. And I do think if we break down to the downside, we may see ourselves get supported again by the $9,300 level. However, the next one is the 9,000 level even. Now, if we were to fall below that, well, then we're going to change our tunes. And if we stay below that, we may have to actually become bearish short term. You do notice a lot of support right around this $8,000 VPVR. You can see the red right here. Massive buying around that level. And the really, really low level would be 7,000, but I'm not going to go that low right now. Currently, let's just take it where we are. The next level is 9.3, and then we may go down to 9. But this is what people are afraid of. They are concerned that what the Bitcoin chart is essentially doing right now is just a smaller version of what Bitcoin had done back in the 2018 2018 bear market, right? Where we consolidated and then we finally had this drop off. So the question is, is Bitcoin looking to sort of put in a similar pattern like that where we sort of bounce around, we get to this end, and then we have a drop off before, blasting back off again. Please mind my crude drawing, guys, but that's basically what I'm hearing. And a lot of people are worried that this is what is going to be happening, okay? Well, obviously we know that there's a chance to break out even sooner because we do have this descending channel, but we do want to break out sometime around the middle of September, but Bitcoin tends to break out sooner than later. So having a look at that, the first thing you'd want to do for a positive move is to get above this EMA ribbon. You can see once we get above it, we tend to have a nice little run. But what I don't like is right here, you see the ribbon is actually starting to invert on itself, and that is not a good thing. And if the ribbon was to actually completely flip the other way, that would actually signal that we are now in a bearish momentum, okay? So I'm not saying we are, but I am keeping my eyes on it very, very close. If we zoom out, one of the problems that we're seeing is this super, super low RSI. I mean, we haven't seen RSI levels, this low since basically back in the very beginning of the bear market, or you may even argue the height, January, of the altcoins rally, right? So that is something that a lot of people are worried about. I will say this, we are still well above the exponential moving 21 exponential, which is the $9,000 level a lot of investors are looking at, and we are still sitting above the 100 and 200. So that is very good. However, keep in mind, if we were to fall down to those levels, you are looking at around $4,300. Do I think we're going to go that low? Absolutely not. But I'm just a guy on the internet, guys. Obviously do your own research, but let's zoom out. Let's really zoom out, okay? Stop looking at the 25, half hour, 15, 1 hour, 4 hour daily charts. Let's look at the big picture right here. There's two main lines, and it's pretty simple. The first one that you have is this exponential purple curve. You can see over time, it does start to get flatter and flatter over time, and currently we have respected that, okay? We've never fallen below that in the history of Bitcoin's existence, and currently, which I do not believe that Bitcoin would fall straight down, but if it was to fall straight down, that is sitting at around $6,000. And Bitcoin's not going to fall straight down. It would probably go sideways a little bit. So that's why one reason I don't think we're going to see a Bitcoin below 6K. And the other thing too is you have this green line right here that's basically been this trend that's followed us way, way, way back since we peaked out here in January of 2012. And you can see once we got back above it, right when we sprung above it in the beginning of the year, we've basically maintained above that. And if I zoom in, just to kind of show you guys, you can see that we've absolutely been respecting this line. And if Bitcoin was to fall straight down, that line would be put in at around 8,800 to be the bottom. Interestingly enough, the 21 exponential is also showing us that 9,000 is sort of where a lot of these traders are calling the local bottom. So I just wanted to point that out moving forward. But here is something interesting. If we have a look at these charts, this is the fundamental part I wanted to show you about. Bitcoin sellers are actually disappearing fast. Look, have a look right here. So basically this charts the distribution of the holders, right? And it's ordered by the price range at which they bought the Bitcoin at. And you can see the largest weighting of holders can be found in and around the $10,000 range. And I like to point out the note here, interpretation, 290 million of the current realized cap is attributed to Bitcoin that last moved when price was between 19,000 to 19,500. These Bitcoin have unrealized losses, but that's not what we're focusing on. If we switch over to this, you see this wasn't always the case. As recently as January 2018, the majority of coin holders were those who had actually bought in closer to the $20,000 range. No wonder so many people were pissed off and think that Bitcoin is a terrible store of value. Most people bought the hype. Actually, side note, before I continue this, I actually was down in Maryland this week. That's when I was traveling. And I was speaking to a guy, and he was talking about how he bought Bitcoin, but he was telling me he bought basically all his Bitcoin higher than 16,000. Unfortunately, most retail people did. You could see most Bitcoin holders were those that had bought, unfortunately, above the $10,000 level. In fact, most of them closer to the 20K level. So the reduction in those red bars over the past 18 months is actually a sign that many high-priced holders have actually sold off their assets. So this is really good news for Bitcoin's price stabilization, since it means that the majority of those who are most likely to sell have already sold. You see what I'm saying? So this is actually good. We've sort of washed a lot of that out. So that's basically the point I wanted to make. And I think that the next major selling point is probably going to be right around the 20K level. People that maybe bought in and they're just like, you know what? I'm just going to hold. I just want to break even. I just want to get my money back. But after that, once we break that 20K level, it's basically just going to be full on price discovery from that point on. And before we go on any farther, yes, we have had an incredible pullback from the $14,000 level that we hit this year. But I just want you to look at this chart real quick. Look at all the time that there was to accumulate. And this is just starting this year. I'm not even going back to December when we hit the low. Look at all this time we had to accumulate Bitcoin under 4,000. All this time between 5,000 and 6,000. And this green box represents all the time you could have accumulated Bitcoin under $9,000. Well, currently Bitcoin's sitting around $9,600. You could see if we just take an easy measurement, you basically have had 165 days to accumulate Bitcoin under $9,000, okay? So the fact that you had all that time and just recently Bitcoin's been pulling back from this, massive parabolic run-up that we had, this is natural. This is consolidation. This is, investors taking profits, and this is the markets having a healthy correction. You don't want to go straight up forever because don't forget, the faster you go up and the higher you go up, the more you tend to crash or the harder, I should say, you'll crash and the faster that you will, right? So I just wanted to point that out moving forward. Now, here is something interesting too. You guys may be familiar with Raoul Pal, former head of Goldman Sachs hedge fund sales business. Don't forget, they were telling everybody to buy, but okay, that's for another day. Anyway, he explained that as it stands, the most popular asset classes make no sense for millennials with 10 to 20-year outlooks. He says equities are roughly at all-time highs, are pushing extreme valuations for relatively little profit and potential. There are a lot of parallels between now and the 1930s. From 1929 to 1932, we had a debt crisis. Interest rates fell to zero. There was a lot of printing of money, and purchases of financial assets brought their prices higher. So he says even real estate isn't attractive, with the prominent investor calling the asset class unaffordable, adding that it makes even less sense to purchase homes because they're kind of trending near all-time highs. So what the hell does a millennial do to save for the future when almost all assets have negative imputed returns for the next 20 years, maybe 10 years? Well, look, the answer right here, as he says, is you take the opportunity of cryptocurrency and Bitcoin. Cryptocurrency and Bitcoin is the money of the next generation. It is the money of the internet. And like Rhythm Trader said, what if I said I wanted to borrow $100 from you and pay you back $99 5 years later? Would you do it? Of course not. Yet that is what's happening with the $17 trillion of negative yielding debts, the mother of all financial bubbles. And if you have a look over here, you can see this actually came out from Bloomberg, and this is a pretty popular article. It's going viral. It's really making its rounds. And you can see that 30% of all investment grade securities are now bearing sub-zero yields. Gotta love a dancing bear party, but this means that investors who acquire the debt and hold it to maturity are guaranteed to make a loss. But people are still buying. Why would you buy something that you know you're actually going to lose money on? Well, they're seeking to benefit from further increase in bond prices and favorable cross-currency hedging rates, or at least to avoid greater losses. Well, that doesn't sound like a good deal. I'm just trying to avoid an even greater loss. Okay, so at the same time, you have banks that are actually having to reassure their citizens that they won't suddenly start charging customers to store their money. In fact, we've heard about that. Banks actually charging people money to keep their money in the bank. Guys, this is absurd. This is absolutely absurd. So scrolling down here, you can see basically they show you this is how it works. If you were to invest 102.62 euros for a German bond with a face value of $100, well, then in 10 years, you would get back $100, but you would lose 0.26%. Not only that, but don't forget, it does tend to inflate over time. So considering that, the dollar tends to lose 2 to 3% annually, plus you're losing your initial 0.26%. Why would you do this? Just to simply not lose more money? This is insane to me. I cannot even believe that people are doing this. So when, asking what's a better alternative, maybe Maybe that guy right there, maybe. Just saying, not financial advice. But look at this, guys. India's richest investors are looking to ramp up their allocation to cryptocurrencies as concerns about a slowdown in the economy are gripping the nation. About 36% of India's high net worth individuals are pessimistic about the Indian economy over the next 3 years. The fact is pushing them to invest in safer and alternative assets, namely real estate. A similar percentage of people say they are avoiding risk altogether when it comes to their funding. But despite the desire for risk-off assets, 9% of wealthy Indians say that they would increase their allocations to cryptocurrencies over the next 3 years. You can have a look at this chart right here. You can see 30% real estate, 26% stock, 26% fixed income, 9.6% cryptocurrency, and that's actually beating out artwork for 7.7%. So nearly half of the respondents said that they don't know much about virtual currency. That's a problem right there, education. But among those who were educated about it, the largest group indicated that they would prefer to invest in Bitcoin, 30%, 8.7% Ethereum, and the remaining 6% said that they would invest in XRP. But just getting off that topic, you can even see that, look at this, a firm owned by billionaire trader Alan Howard is planning to launch a $1 billion venture, okay, that will put money in a range of cryptocurrency hedge funds aiming to capitalize on dramatic revival in the sector this year. So why would these guys be looking to put $100 billion into this sector if they didn't think it was valuable? You can see Elwood Asset Management is currently working on a platform that would design portfolios of crypto funds for institutional investors. The aim is to steer investors towards a select grouping of funds with higher quality operations so they can avoid blowups in a sector full of hazards. So hedge funds focused on cryptos are almost up 60% on average to the end of July, right? Don't forget, guys, we also have Backed launching. Now, a lot of people think that, what's the difference? Backed is futures. We know what happens when futures launches. The price drives down. Although the question is, this is an interesting thing. Was the run-up that we had basically similar to what we had in 2017 and the CME futures are going to look to dump? Or is this consolidation that we're having right now the opportunity for these guys to buy cheaper and then the price is going to pump? Well, that's something to consider. Now, as far as altcoins go, this is the altcoin index perpetual futures from FTX. Do I really have to go into detail? Not doing quite well, guys, but talking about the looming possibility of a no-deal Brexit with most of the UK up in arms, you could see that even on Google Trends, Bitcoin is outperforming searches for both Boris and Brexit. So what does that really mean? Not really anything. Take that with a grain of salt. But speaking about the no-deal Brexit, we are seeing some effects. For example, Coinbase is going to be forced to transfer all of their European accounts on their platform to another entity within the EU. So they sent an email out to all of their users. You could see Vanessa B. She basically posted it right here on Twitter. But essentially, they say that in light of this, they plan to transfer the current relationship, but you don't have to worry about this. They say that you don't have to worry about your services being affected, but this is taking place in the background. But that being said, guys, I do want to try to keep this video under, a short today. So I like to end on this note. Is Bitcoin volatile? Yes, it is. But when you have a look at it from a different point of view, these are the all-time lows for each year. 2012, $4, 2013, $65, 2014, $200, had a little bit of a hiccup here in 2015, $185, $365, $780, and $3,200. So a historic look at yearly lows reveals a bigger picture. So that is it for me today, guys. Are we looking for, where was that thing that I drew? Where is that thing? I can't find it right here. Are we looking to do something like this, guys? It's possible. Yeah, more opportunity to accumulate Bitcoin. I still know where this thing is going long term. It's very easy to see the trajectory of this, but short term, it's boring. And yeah, but volatility is going to come back, and when it does, it's going to come back with a vengeance. So let me know what you're doing. Are you buying? Are you selling? Are you accumulating? Are you doing nothing? Are you leverage trading? What are you doing? Are you buying altcoins right now? I'm curious. Let me know if you stayed to the end of the video. Drop that comment below. I will